Oh man, the moment we've been waiting for is here. The debt ceiling limit has finally been passed through the Senate, meaning the US has officially avoided default. Crypto and wider markets rejoice. We've got Bitcoin up 1% here. Are we officially done with this pullback? You guys know I've been warning since 31,000. Now guys, we could be pulling back down towards that 25,000 level. Of course, that transpired here in this pullback. Is this pullback officially over? And can we start putting our risk on hats back again? We're going to dive into the key levels. Make sure you smash the likes. Don't forget to subscribe. First and foremost, guys, if you haven't watched my banger of a video from yesterday, you've got to take out 10-15 minutes of your day to go watch that. It's a nitty-gritty video on how to actually trade. I actually reveal the secrets I've learned over a decade of trading, including with a major investment bank, to give you the actual tools. I've built spreadsheets for you. I've built simulators for you. It's all in that video, so make sure you watch that. Of course, this is going to be a topical video to give you an update on what's going on. The debt ceiling video is passed. Bitcoin moving up 1% here, bouncing from a very important level. If I zoom into the hourly here, you can see Bitcoin always held this 26.6 level, which we had drawn out, which is very, very good. Now we're creating a bit of a W pattern. Really nice, right? Create this W pattern, break to the upside, and this can work us to 27.7. But is this over? That's the question we need to talk about. And the only way this is going to be over, and I'm going to sound like a bit of a stuck record, but I'm not apologetic about it, is we've got to work through 29, 30, and 31. That is the situation right now. Now, of course, given the news headlines, momentum is going to be positive now. Okay, if I jump on over here to the pre-market, you will see that the Nasdaq is up 0.5. You can see S&P is up 0.5. You can see the Dow Jones is up 0.5 as well. The market is feeling kind of positive. But we also have the non-farm payrolls to look out for, right? So the non-farm payrolls will be out in the next couple of hours. Make sure in my Telegram group, ijaz.uk/Telegram, because we alert as to what it means for the market when that data comes out. Market's expecting 190,000, right? If this misses to the downside, we could still see some pain today. Hopefully not. I'm going to explain why maybe we won't. But if this comes in too high a number, higher than 190, markets are not going to be happy. We already had our JOLTS figure, which came in hot earlier in the week. We already then had our ADP figure, the private figure, which came out yesterday, too hot. So markets are expecting that this could surprise us to the upside as well. Now, this is why this now starts to matter. And this is literally yo-yoing every single hour. When we made our video yesterday, 60% of the market had priced in that we were going to get 25 base points. Now, when you refresh, you can see here, 75% of the market have priced in that we're going to get a pause at this meeting. Like, where are they getting this notion that we're going to pause from? And this is the bit that gives me a little bit of short-term worry, because the markets can't price in a pause. Because the data, the core PCE data last week came out horrible. So far, the jobs figure has been horrible. Unless there's a good jobs reading today, I think that we're probably expecting another 25 basis points, right? The economy's healthy. We're not plummeting into a recession. And for that reason, Jerome Powell can go ahead and do 25 basis points. Now, of course, we're getting a little bit of euphoria in this market today because risk is rotating back on thanks to them avoiding the debt ceiling. Guys, just to put this into perspective, the US will prevent its first ever default. They left this literally days, right? Days. This was really, really close to them defaulting. But we knew that was going to happen. Every single time they've raised the debt ceiling, but they played chicken all the way to the final hour. But markets have to respond. We spoke about this over the last couple of weeks. We covered this throughout the month. Markets had no choice but to respond. If politicians are playing games and risking a potential default, which is, even though it's a small percentage, it's a catastrophic event, markets have to price in the expected value of that. And that is why you get pain in this market. But the beauty now is, now that that's in the rearview mirror, can we capitalize? Can we now get back to where we were before we started the horrible month of May, and towards the end of April, where we plummeted from 31? Can we get back up to 31, break above there, and continue some of the more exciting patterns that we can see in the chart, which allow me to give you guys a price target of the cup and handle pattern? If I show you this here, of 45,000. Yes, this cup and handle pattern is a huge reversal pattern forming on the weekly, which I believe in. I think if we can get out of this trend here, break the handle to the upside, work above 31, and the neckline obviously of this is at 30,000, we can work our way to 45,300. It could be a really nice breakout and a big move. Guys, I had a lot of questions yesterday after the trading video about where can I get access to all the tools and the softwares you were using. Head over to ijaz.uk/store and you'll see a bunch of different things which you can purchase on there. My crypto trading journal is coming soon. But other than that, you can get access to the position sizing calculator, which I use for every single one of my trades. You can get different wallpaper packs. We're going to update those with more as well. And you can book one-to-one coaching sessions with me as well. Also, definitely check out the ultimate crypto trading checklist. That's a checklist which I use. I've printed on my desk that whenever I'm executing a trade, I tick through that checklist to make sure my emotions are not getting the better of me and that I have positioned myself well for every single trade. Remember, trading is about managing your emotions more than it is being a genius. Now, the other reason I believe in this pattern is look at this cluster. We spoke about this yesterday. This cluster was the only bit of support we had when we collapsed from 48,000 up here. Boom, collapsed, had a little bit of support, and we kept falling, right? Kept falling. So on the way up, it's going to be resistance. And that's why we're seeing ourselves consolidate here. That plus the debt ceiling drama we've had for the last 4 weeks puts us in this consolidation pattern. But now with that clear, with dollar index now moving to the downside, let me show you that as well, guys. Dollar index will now take a beating because risk will rotate back on. Look at that, guys. A nice red candle on this week for the dollar index. If I jump into the daily, you can see exactly how it's curling off. And look at my draw. Look at my line. Look at the drawing we shared yesterday. We needed to do this. We need it to come back down and lose its EMA ribbon. At the moment, it's just retesting the EMA ribbon, but we need it to lose the EMA ribbon. Lose the EMA ribbon on your weekly, get rejected by your EMA ribbon, get thrown back to the downside. This was just a wick above it. Get thrown straight back to the downside with a bad week for dollar index, and that will be a good sign for Bitcoin. Because if I show you the equivalent chart on Bitcoin, what that then says is, look at that. We just get a nice, perfect retest of our EMA ribbon. We start trending in this direction, get past 31 on the peak of there, and upwards we go. And all this would have been was just a nice, healthy pullback, which we were calling all along. Remember, this is only bad. This pullback was only ever going to get nasty if we lost our EMA ribbon. And I said that continuously. But so far, so good. We've managed to get the debt ceiling issue away from us, behind us, resolved without losing our EMA ribbon. A major coup and can now move us forward to the next piece of data, which is the jobs figure. And then in 2 weeks' time, Jerome Powell's FOMC meeting. But so far, markets are now pricing in that we're going to get a pause. So this just has me a little bit antsy because when that data comes out in the next couple of hours, markets are going to have to price it in. So if that data comes out bad, markets are then going to have to reprice in the 25 basis points. So we could see a little bit of pain here short term. So to summarize, guys, this is not a market I'd want to be out of right now. I'm firmly in this market, and if I wasn't in the market, I'd be desperate to get into this market right now. We are so poised. Nicely pull back into our EMA ribbon. You didn't chase green candlesticks at 31. Instead, you're buying on the bottom wicks here around that 25,800 level mark. Congrats if you were DCAing around that mark. And now we look set to go and test that level. If we cannot break that level, this is the worry. If we cannot go up here and break that high, then there's weakness in the charts. And that could suggest two things. Either one, we're going to come back down to retest our EMA ribbon and go into a bit of a bearish territory, right down here. Or Bitcoin is not ready for the move to the upside just yet, in which case maybe we're set for a few months, a few quarters maybe even, of us moving sideways. So that's the situation right now. If we don't have permission to get above 31, maybe we're set for a bit of sideways action before we finally muster up the courage to move to the top side. Hopefully you guys appreciate these quick updates based on what's going on live in the market. Make sure you're in our Telegram group, ijaz.uk/Telegram. Make sure you check out my TA course, ijaz.uk/TA, to learn all the different things we go through, all the chart patterns we use to enter and exit the market efficiently and profitably. Make sure you watch the trading video from earlier, and I'll see you in the next one.